All right, good morning. I guess I'm so sorry. Good afternoon, everybody. It's officially noon. We're going to go ahead and kick things off today. My name is Jason DeBono, Vice President, Newview Trust Company. We're going to get started today on really a fun topic and a unique topic to talk about, and that is checkbook control, also referred to as the IRA LLC. Now, I've been in this business. I started in the self-directed IRA industry in 2005. So going on year number 15, and this topic is probably the one that my opinion and the industry's opinion and the overall regulatory opinion, as well as that of the IRS, has really changed a little bit. Most of the things that we talk about, the rules have been pretty well grounded and carved in concrete, and so very rarely have we had to have discussions about, well, you can do this, but you couldn't do this a few years ago. But the IRA LLC is definitely one that certainly is garnering a lot more attention for a lot of the right reasons, as well as for a lot of the wrong reasons. So we're going to talk today about what does it really mean, what is kind of the evolution been, and I'll sprinkle in some timelines along that, and then most importantly, how do you set it up, and is it right for you? So, when it comes to self-direction, understand that you can self-direct without an IRA LLC, right? And so we hear this all the time, and people will say, well, I have to set up a self-directed LLC. And we'll say, okay, well, why do you need the LLC? And they'll say, well, someone told me I do. I want to make sure at least that we start with, this is an optional structure, all right? It's not a required structure. And it's optional, meaning you can or you can choose not to do it. And we'll talk about the things to consider in the process as to whether or not it makes sense for you. Just so you know, Newview can provide you custody of your self-directed account, whether you buy your investments directly or whether you choose to buy them through an LLC. Right? It doesn't change our world in terms of being able to service your account. Right? So let's get started. Well, first of all, who is Newview? I'll tell you what we're not. Newview is not CPAs. We are not attorneys. We don't structure deals. We don't strategize. We're a non-fiduciary third-party custodian, all right? Our job is to hold your assets that you decide or desire, and is to provide all the record-keeping and reporting that the IRS requires. Outside of that, all of the legal, tax, and professional advice that you seek needs to come either from your own resources or people that can provide you that type of information. Newview does not recommend, approve, endorse, structure, or strategize as it relates to any one particular investment. That's the in self-direction. Who is Newview? Well, Newview, we are a custodian for retirement accounts. We are a South Dakota state-regulated trust company. We have a charter to be a public trust company based out of South Dakota, the largest state for trust assets in the United States. We've been in business now going on our 17th year. We've got nearly 50 employees, almost $1.5 billion of assets under custody, all held in alternative investments, some of which are held through LLCs, many of which are held directly through self-directed accounts, and we'll certainly make sure that we talk about that. And our goal is to be simple, responsive, and relationship-driven. So we want to make this process as simplistic as we can while still maintaining a good relationship and being responsive to your needs. So let's talk a little bit about checkbook control. So when we talk about what checkbook control is and what its premise is, right? Checkbook control is simply a mechanism by which you own the assets within your self-directed account. So let me repeat that. An IRA LLC is simply an LLC structure, right, that holds the assets ultimately owned by your IRA. So in a normal environment, and normally I'd use the whiteboard here and talk a little bit about it, but on video it doesn't come across as well, so you'll have to work with me. But in an IRA, if I choose to set up a self-directed IRA and I want to go out and buy an investment, let's just say a piece of real property, my IRA can go buy that piece of real estate. My IRA can take it under contract in the name of the IRA. It can be purchased and held right in the name of the IRA. And then all of the payments and expenses could be paid either by a third-party property manager, or they would route through Newview at you as the client's request, so you could tell us what to pay. And all of that could be done without an LLC. There'd be absolutely no reason to have it. All of those assets would be held directly in the name of the IRA. Okay? What an LLC says is it says, I don't want my IRA to take title to the piece of real estate. I'm going to go out and set up an LLC that my IRA will take title to. So the IRA is not investing in real estate, like we discussed. The IRA is actually investing into the LLC. So it will buy 100% of the shares of the LLC. Then the LLC will take the money that it sold those shares for, and it will in turn go buy investments on behalf of the IRA. It's a pretty unique strategy. We'll talk about how it works and some of the pitfalls, but in a nutshell, that is what self-direction is. The primary function for most people, from what I get back in terms of feedback, is it gives them quick access. So if they want to go do something, they can write their own check, right? That's why people refer to it as checkbook control. It's not the IRA LLC, it's that checkbook control. If I got to pay a plumber, I can write a check. If I got to do something, I can write a check. And in some cases, that can make tremendous sense and would be absolutely worth the work and effort to set up and maintain that LLC. And I don't know if that's right for you. We'll talk about the things to consider as we go forward. So when we talk about, this is kind of what I should have clicked to this, but you can see you can buy the investments directly through the IRA or indirectly by setting up the Checkbook LLC and having that LLC purchase those investments. Okay? So a couple of things. So when we talk about how this works, right, I want to make sure I'm going to walk us through the process because I want you to understand what it entails before you determine if it's right for you or not, right? So we're going to go step by step. Step number one, you have to have a self-directed IRA. It doesn't matter if you buy your investments directly or indirectly, you must have a self-directed account because somebody has to either serve as the custodian to hold assets within that account or to hold the LLC within that account. Either way, you got to have a self-directed account. Step two, money has to be moved from your existing retirement account today to NewView as custodian. So the money does not go from Charles Schwab at your old 401k to your LLC. It goes to the custodian first because that's a custodian to custodian transfer. Then you can direct the custodian to make an investment into that LLC, and the money will move from the IRA at NewView to the LLC under the name of your IRA, right? So step two is actually getting the money moved from custodian to custodian. Step three, the LLC will need to be formed, right? There is no requirement that an attorney does this, although we always recommend having an accountant or attorney, set these up for you. It's not much more money, but you get that extra protection and knowledge so that you make sure that you don't make any errors. A couple of minor things in this. Number one, the cost of setting it up needs to be paid by the IRA if it's going to be wholly owned by the IRA. Because the IRS could argue, why are you personally paying for this LLC when you're 100% buying it in the IRA, right? So that's one element. Number two, the member, right? This needs to be a non-member managed LLC. Now, for some of you, that may not make sense, and that's okay. When it comes to LLCs, there's managing members. That means that if 10 of us start an LLC and we're all members, one of us is the manager, right? So we're a managing member. In this case, there is no member beyond the IRA. If it owns 100%, the IRA is the sole member. How can the IRA manage it? It can't manage it. So if you're going to manage it, you and your IRA are not the same, and so it has to be considered non-member managed. For those that are going to go establish this on their own, you're going to have to create an operating agreement, right? So that's something that a lot of times if you just go online and you go to the state that you choose to set it up in and fill out all the paperwork, it's pretty straightforward, but they don't give you an operating agreement. And an operating agreement makes it clear basically what the approach and overview is of this entity. How is it going to operate? Because the IRS says if your IRA is going to invest in something, it needs to have the ability to understand what it's investing into. And even though you may think, well, I'm making the decision for my IRA, right? The IRS says there still needs to be some clear paperwork. This is also good to protect you in the event that it's challenged from the IRS saying you violated the intent of the IRA. And we'll talk a little bit about that here in a bit. So if you are going to go do this on your own, you need to go find an operating agreement that you're either taking as a template and modifying, or you're having someone create so that there's a clear operational structure for the entity by which your IRA is choosing to invest into. Step 4, at the direction of the account holder, you're going to direct NewView to buy all of the available shares of that LLC. So whether you buy it as a number of units, a number of shares, or simply a percentage, i.e. 100%, you will direct the custodian, in this case NewView, for your IRA to purchase the shares of the LLC. So when you go online and you see your account statement, prior to the purchase, it'll show cash, right? Call it $100,000. After the purchase, it will show an LLC investment of $100,000. So you won't see anything listed in terms of what the LLC does. Just like if you invest in a Microsoft, there's no listing on your Charles Schwab statement as to what Microsoft's doing with the money. They're only listing what you've invested into, and it would be no different here. We would list the LLC that shows that your IRA has bought this entity, right? And then what the entity does is up to the entity to report and reconcile. Number 5, the manager of that LLC, remember, it is a non-member manager. So for a lot of these accounts, people will name themselves as the manager. We'll talk about benefits and pitfalls to that here in a bit. But if you are, whomever that manager is, whether it's the IRA owner or whether it's a designated third party, that manager is responsible to direct the activity of the LLC as outlined in the operating agreement. So if the LLC is set up to go buy and sell real estate as investments and all the investment authority is given to the manager, then that manager's responsibility is to go find the necessary investments, right, to meet the criteria and be held within the account. NewView has no part in that process. So you're not going to call us if you want to go buy a property. You don't need to call us if you're determining if you should sell it. All of those decisions are made at the manager level. Whether that's the account holder or that's a designated third party, it's still the responsibility of the manager to handle that. Number 6, the manager is responsible to keep track of all the activity. So one of the things that you have to understand is if you book investments directly through your IRA without the LLC, NewView will keep track of everything, meaning at any point, you could request from NewView a statement of all the money that's come in, what it came in, or what assets it was allocated against, all the money that went out, and what all the holdings are within that account. If you set this up in an LLC, all NewView can provide you is the investment and the holding of the LLC. It's now your responsibility to keep track of every dollar that's come in or out of that LLC. NewView does not do that for you because you've invested it through an LLC. Something to make sure that you consider. I do want to pause, and I apologize. I should have mentioned this at the very beginning. I just got so excitable to get into this. But if you have questions, this is a live class. But if you do have questions, there's too many people on here to have the audio open up for everybody. But you do have a chat and a Q&A option on your screen. You can open up either of those, type your question in, it'll show up on my screen and I'll get that read aloud. So if you do have questions at all, please make sure you type those in. Again, my apologies for not asking, but I will pause every couple of slides and see what's come in and get those addressed. So the process of holding this LLC, and let me actually go back a slide, is the last step of this process is keeping track and providing NewView the fair market value of that entity every year. Right? We need the fair market value because it's required. We would ask this of you whether you own real estate. We would ask this of you if you own a private placement, whether you own a private note. Your responsibility in a self-directed account is once a year to have some clear approach, usually through some third party, of determining or ascertaining a value. In this case, the way it works in the LLC is you would take all the cash, plus the 1231 value of any assets that you hold, you would combine all of that if they're all owned in the LLC, and you would provide us one number. So if you own 2 houses, each worth $100,000 as of 1231, and you had $50,000 of cash, you would report to us the LLC is worth $250,000. And you would do that every single year. So let's talk a little bit about benefits and drawbacks. Okay? And I'm going to start with benefits. So I'm going to tell you the benefit and tell you maybe in some real terms how that works. So quick access to IRA funds. Now, that's a major benefit, but it may not be a benefit if you don't need it. If you are only going to go buy 1 or 2 properties and you're buying them in a standard process, meaning you're going to go on the MLS, you're going to find properties for sale, you're going to negotiate through a realtor, and you're going to buy it. This LLC benefit is not there because the process of that is, it takes enough time where you don't need to write your own check. If you have a property you want to take under contract, once you have the contract, you have 3 days to have escrow money there. We can easily meet that. You have 30 days typically to close. Of course we can meet all of those requirements. We can close in 2 days. So I tell you it's a benefit, but it's only a benefit if you're buying the types of investments that require quick access to money. As far as paying bills, again, depends on what bills you're paying. If it's a rental property and you got a property manager, you don't need an LLC. You're adding more work and effort, and it's not providing you any value. But if you're going to go have 10 properties without a property manager, yeah, it may be best to be able to write the checks out of there, right? So you have to decide this is a benefit only if your investment philosophy or strategy proves for this to be a benefit to you. Number 2, ability to partner multiple accounts. Now understand you can do this outside the IRA. It's just a little easier, or outside the LLC, it's a little easier. So let's say you have a family of 5 people and all 5 of everyone in that family has an IRA or some sort of account. Instead of you putting all the names on title and trying to slice it up, everybody can buy a prorated interest in that LLC, and then that LLC can go and make the investments. It simplifies title a little bit. Cost effectiveness. Now this only starts to look attractive as you buy more investments, and I'll explain why. If you go out and make one investment in your account, right, with NewView, the fee's the same, whether you buy one LLC or one property, right? It's the same. As you buy multiple investments, it may get cheaper. What I mean by may is depends on the value of your account. It may actually be cheaper to pay on the value, then it doesn't matter how many investments you have. But if you are going to choose the per investment billing method, then yes, it will get cheaper for you as you buy more investments, but it's not one-to-one. What I mean by that is it's not, fee neutral if you buy one investment and cheaper if you buy 2. Here's why. LLCs have a filing fee. So every state that you set up an LLC in has an annual fee. Some as little as $150, which I think Florida is somewhere around there. I've heard California is as high as $400 or $500 a year, making it way more expensive to have an LLC because the cost gets more expensive. So something that you need to consider. The second piece is who's going to set it up. If you're going to go pay someone to set it up and they charge you $1,000 and you save $200 a year, you really are not actually saving any money for 5 years. So are you going to have this account for 5 years? And is it beneficial for you to pay that upfront cost for something? So make sure that you're not just looking at this and reading on the internet when someone says, oh, it's much cheaper to have an LLC. Make sure that you're actually validating that by looking at what you intend to do and comparing it to our fee structure. And you may find in a lot of cases when you actually add in the additional piece of LLC filing fees and creation fees, it generally isn't any cheaper. The other piece of this is you're taking on more work. It's kind of like mowing your own grass, right? Well, of course it's cheaper to mow your own grass, but guess what? I got to get the mower out and go out there and do it. I got to buy the mower, and I got to give up my time, and my time is worth something. If I go the LLC route, my time now has to be invested in keeping track of my investments. If you don't have software to do that, you may be paying a fee for that, but you've got to keep track of all of those things. That takes your time, and you got to factor in what's that worth. I'm not making a case that it's never worth it for the LLC, but if you're going to buy 1 or 2 investments that are not quick draw type investments that require immediate money or tax liens or stuff, foreclosures, the LLC doesn't make a tremendous amount of sense from those perspectives. Number 3, full control, major benefit. This one can't be touched. It's the only way for you to have full 100% control of your IRA. Now through us, you have all the decision-making control, but you don't have 100% control. And that's certainly something that only the LLC can provide you. Easier access to both public and private investments. So if you have an LLC, the LLC can go open a brokerage account and it can buy stocks and bonds. And then it can also open a regular bank account and use those cash proceeds to buy alternative or non-public investments. So another big benefit of the LLC. Drawbacks. Number 1, no custodial oversight. Now, I want everyone to understand our job is not to determine that you're behaving yourself, right? That's not our role. It's not our responsibility. We don't review investments. However, every investment that you do through your IRA directly, so meaning you don't have the LLC, you have a professional on the other end of that transaction to be able to ask questions to and get steered in the right direction. So if you're uncertain about a transaction and you reach out to us and say, Mr. Newview, this is what I'm looking to do, we can give you some insight into, hey, no issues at all, right? Meaning what you've told us doesn't appear to have any red flags, or yeah, there may be some real questions about that. You may want to go seek some counsel. So you lose that sort of ability without having a custodian between you and your investments. I'm not saying that's a reason to not do it, but it's certainly something to factor into the decision-making process. IRA rules are still in effect, right? This is one that I hear all the time. Well, if I have an LLC, right, I can do X. And my comment is always, if you can't do it in your IRA directly, you can't do it indirectly in an LLC. If 100% of the account, if 100% of the LLC is owned by an IRA, 100% of the investments are subject to IRA rules. So self-dealing, prohibited transactions, all of those things are all going to be rules inside the LLC as well. So this is not a way. I cannot tell you some horror stories of things gone terribly wrong. I've had a client that, set up an LLC, went out and did all these investments, and then only to find out that they had loans in the LLC that had a personal guarantee. Prohibited. Now, this isn't to talk about what those rules are, right? We have other classes for that. But this client had 3 or 4 properties that had expressly prohibited transactions. And when their accountant found out about it, the accountant had them call us looking for resolution. And we said, we can't help you. We didn't set it up, right? We only hold the LLC. And that client had to go self-report a prohibited transaction to the IRS. And unfortunately, in the eyes of the IRS, ignorance is not an excuse. We've had other issues where we've gotten a call from a client that said, well, I don't have that LLC anymore. We've said, well, what do you mean you don't have that LLC? So far as you reported to us 12/31 of the previous year, you had $85,000 in there. Oh, well, I took the money out. I've been taking it out over the years. Well, where have you been taking it? And they've just been writing checks to themselves and going and spending the money. Obviously, they've been taking money out of an IRA without paying tax and without reporting it to the IRS. Right? And so that client, too, had to go self-report over many years of doing this penalties, right? Because they took money out and they didn't pay taxes. All problems that were created because they thought this LLC allowed them to do whatever they wanted, and it doesn't, right? And that's something you need to make sure that you're following the guidelines. Way easier to commit a prohibited transaction. We talked about that. I mentioned this as well. Full record-keeping responsibility. So of course it's cheaper. And I've had people say, you don't like LLCs because they're cheaper. And I have told them, I don't like LLCs because most clients don't need them. The people selling them suggest they do, but at the end of the day, the average client that's buying 1 or 2 investments in a self-directed account doesn't benefit at all from an LLC. But the clients that own multiple investments or buying quick turn investments or need quick access to money, I think the LLC is a fantastic structure. But when you couple the fact that people probably don't really need it, they're being sold this product, they put it in their account, and then they likely are going to go out and commit a prohibited transaction. We are, I'm very passionate about self-directed accounts. I've been in this business 15 years. I've seen over time how much value this can add. I hate to see people utilize a tool and then add some complexity to it, and it doesn't provide them any benefit. Or that, it comes fair market value time and they don't know what they need to do, or they've committed prohibited transactions because they haven't followed any other rules. Or it costs them more money because they only own 1 investment, and our fee would be identical if they owned the LLC or the piece of real estate. And so they take this on and pay LLC filing fees, and they pay record, they manage all the time and energy to record keep it at no cost savings to them. So when it comes to these accounts, you need to make sure that it really makes sense for you. And if it does, learn the rules, follow them, and this can be a great structure. If it doesn't, then just self-direct directly through your account. Don't waste your time and energy with the LLC. Either way, Newview can still serve as your custodian. Right? Now, something that is important to note, if you'd asked me this 15 years ago when I first started, most companies in this business, and did not even allow LLCs because there was a lot of confusion around whether or not the IRS permitted. There was one landmark case that people held their hats to. Since then, there's been quite a few additional cases that the IRS has actually made clear it's not the LLC structure that's gotten anyone in trouble or that's caused the audit, it's the behavior inside the LLC, and that's really important. As a general rule, if you structure this appropriately, which isn't terribly difficult, the IRS has made clear in a couple of different cases that it's not the structure that they worry about. But the behavior of the people in the LLCs is what they've gone after people for. And most of the time, it's because those individuals were towing the line. Now, whether they were guilty or not is not my problem. That's between the client and the IRS. But understand that if you're going to take on an LLC and you're going to be writing your own checks, if the IRS comes in and asks questions, you have to be able to show them all the details. Okay? And that's something you inherit inside this LLC. So just be aware of that. And I would never suggest that anyone use an LLC unless they were 100% familiar with the rules and where to go find the rules in the event that there was some unfamiliarity around a particular investment. So things to make sure you understand: your IRA or your IRA LLC cannot purchase life insurance or collectibles. Your LLC is likely going to be prohibited from transacting with anyone in your immediate family, people above you, parents and grandparents, people below you, children and grandchildren, as well as spouses and businesses of any of those entities, any of those parties. So if you have an IRA LLC, that LLC cannot invest money or write a loan to you personally, because if the IRS looks at that and says, your IRA LLC has written a loan to you. Your IRA LLC, that's direct transaction between a prohibited party. So make sure that you're following those rules. As far as our fees, so I want you to understand from a standpoint of how we set this up. It costs $50 to open your account. Now, we waived that for attendees of today's webinar. It's $95 to set up the LLC, or for us to fund the LLC. Remember, we don't create them, right? Whether you buy a piece of real estate or you buy an LLC, it's the same $95 fee. And I want to share that because for those of you that are considering buying one investment in this account, the LLC is not going to cost you a penny less, right? It is $295 a year for that asset. So if you buy two properties, it costs you $600. If you buy one LLC, it costs you $295, right? So there can be some benefits as you buy multiple investments. But remember, there are additional LLC fees that should be considered in that process. So moral of the story is, from a fee standpoint, I would not consider an LLC until I was going to hold more than one investment. 2, maybe it makes sense. 3, it starts to be a cost savings benefit. But remember, you're not just saving money because it's cheaper. You're saving money because you're taking on the record-keeping responsibility that NewView no longer is responsible for. So you're not just getting free money and free discounts, you're actually doing some of the work, right? Like rehabbing a house. You can go in and save money, right? And you can paint the place yourself, et cetera. But at the end of the day, a lot of professionals outsource that stuff because they don't want to invest the time. That time costs them money and they'd rather pay someone else. So you have to decide, is your time worth, what's your time worth? And how much do you need to save with an LLC to be beneficial to take on the workload and responsibilities that come with it? Let's see here. How are we doing? I've got a question that's come in. Let me pause here. And let's see, there it is. And now would be a great time. I've got a couple questions coming in. We're wrapping up. The question says, is it possible to convert an LLC self-directed to a non-LLC self-directed? So great question, and I appreciate that. Not a loaded question, but a good one to address. That what it sounds like is someone set up the LLC and probably realized it may not be as valuable as they once thought. So I'm going to answer it both directions. So let's assume that you set up an LLC, you buy 1 or 2 investments in the LLC, and you decide, I no longer want to hold this LLC. I'd rather hold the assets directly in my IRA. You can do that, right? You would dissolve the LLC, meaning you wouldn't renew it, and you would, as the LLC manager, or whomever the manager is, would assign the investment from the LLC name to the IRA's name. So if you had 2 properties, you would assign both properties to the IRA. When they reached us, we would then take the LLC and we would exchange it for the 2 investments that made up the LLC prior. So it should be net neutral in terms of value of your account, but it will now show as 2 pieces of property instead of 1 LLC. The other way is, let's assume that you started without the LLC and maybe you were decided, you know what, I like this LLC model, or maybe your investment philosophy changed, you're going to add investments. You could also add the LLC after the fact. So you could take let's say you own 3 properties in your IRA directly. You could request new view, you go set up your Checkbook LLC, follow all the guidelines, and then you could actually make in-kind contributions to the LLC and transfer the assets from IRA to the LLC. Still owned by your IRA, but now through the IRA, or I'm sorry, through the LLC. So the title would actually be the LLC, not the IRA any longer. So great question. You can go both forward and backwards in terms of your LLC. All right, let's see. I got a couple other questions. Keep them coming. These are great. It said, I don't think you can, so the question asks about doing work on your property, and thank you for pointing this out. You are not allowed to work on your IRA-owned property, right? It's prohibited. Whether you pay yourself or not is prohibited. And I apologize, I drew an analogy to that without that qualifier. I was simply pointing out the fact that if you do the work, it doesn't mean you save money. It means you traded your labor hours for dollars. You can't make that decision in an IRA for repair type work, but you can make that decision if you choose to keep track of your assets through an LLC. It says, if my LLC receives a 1099 form, how does the IRS know the LLC is owned by a non-taxed entity? That question is for an accountant. You would need to report that. Typically, that's something the LLC would still file a return, right? This is another potential cost to the LLC. It may need to file a return to make that clear to the IRS, but that's an LLC issue. It's not an IRA issue, so I can't answer that for you. But my understanding in scenarios like that is the LLC should be reporting to the IRS each year and then declaring that it's owned in a non-taxable manner. It says if there's more than so this question said if there's multiple investments inside an LLC, right? Are those properties all subject to litigation or subject or exposed from a lawsuit standpoint? Should they be owned in separate LLCs? So I can only answer that question based on what I've heard. I've not seen a single case in an IRA that would answer that. So far as I know, in my 15 years, there's not one case. Most people apply traditional LLC level asset protection to the IRA and follow the same logic. From what I understand, from an asset protection standpoint, if somebody sues the LLC, they can go after everything the LLC owns. So whether it's 1 or 10 properties, I have heard people and I've seen attorneys have clients set up properties in single LLCs for asset protection, and that's certainly something that you can do. We've also had clients whose attorneys have had them set up investments in different IRAs for the same reason. And their approach is, if someone slips and falls in property A, which is owned by IRA A, they can't sue me for property B, C, D, which is owned by IRA B, C, D. And it would be the same logic if you inserted an LLC into that. All right, I got a few more here. Thank you, guys. We'll keep reading these off. It says, can I buy rental property in my self-directed IRA that is in my name? Can my husband also be the owner in that rental property with his self-directed Roth IRA? How about our daughter, CISA? If you're going to own it in your IRA, you cannot put it in your name. If it exists today in your name, you can't transfer it, sell it, exchange it to your IRA. Once it's in your personal name, it can never end up in your IRA. That's considered prohibited. So if you want to buy a property, you could buy it partly in your IRA, partly in your husband's Roth IRA, and partly in your daughter's educational IRA. You could do that, but it would have to be a new purchase. If you wanted to buy it in the name of in your own personal name, there's no way around it if IRA money is coming into play. The only two ways to take title to property through your IRA is either directly, so New View Trust for the benefit of Jason's IRA, or for the IRA to invest in the LLC, and then the LLC takes title to the property, Jason DeBono's IRA LLC, right? Those would both be options. But if it's in your name, the IRS is going to say it's yours, and you can't use your IRA money for it, and you certainly don't want to do that. All right, it says if your property is in an IRA LLC, you can work on the property. If it's in an IRA, you cannot. And the answer to that is no, that's not correct. Whether you own it directly or indirectly, if your IRA is the ultimate owner, whether it be on title or whether it be through an IRA-owned LLC, you are prohibited from doing any of the repair work on that property, right? The rules extend from the IRA to the LLC. I have 401ks with a company I no longer work for. Can you convert those to an IRA? The answer is yes. Once you are no longer employed with a company, we can roll those accounts over into a self-directed IRA, and that's a pretty straightforward process. About half the accounts we open are rollovers from 401ks. It says, so the owner of the IRA can also be the manager of the LLC. I thought that would be a disqualified party. The answer to this is, so far as it's been made clear, yes. Now, I want everyone to understand, just because we've seen it done doesn't mean that the IRS can't take issue with it. The IRS has, on multiple occasions, had audits and had private letter rulings in cases whereby they audited somebody's account that had an LLC set up. In all of those cases, they did not conclude that the IRA owner being the manager was a prohibited transaction. There were cases whereby the IRA owner as the manager broke rules and was found, responsible. But so far as it's understood today, the IRS does not have an issue with that. It's not the appointment of the IRA owner as manager that's the issue. It's the behavior of the IRA owner as manager once it's set up. Are they violating the rules or making investments that are no longer in the best interest of the IRA? That's what will get you into trouble. Now understand that nobody can interpret the rules but the IRS. So we can tell you what we think, but we don't set up LLCs, we don't structure them. Most attorneys on the conservative side or accountants will tell you it's always best to name someone that's non-related as your manager. That's the only way to be 100% arm's length and off the radar of the IRS is to have that third party. If you want to name yourself, just be aware that while the IRS has not called that into question in what they've looked at, it doesn't mean they couldn't do that tomorrow, because the rules don't say what you can't do, right? Or what you can do, they say what you can't do, right? So it gets a little bit gray in that area. All right. Oh, well, I appreciate the questions. This is great. All right. Somebody made the comment, it seems IRA custodians are more comfortable accepting LLCs. And the answer to that is yes. I can tell you over the 15 years, when I started doing this, there was very little information about them. There wasn't a lot of case law or private letter rulings. Everybody was very uncertain, right? Now, there's enough out there for everyone to feel comfortable providing custody. The other thing is, South Dakota has ruled and continues to rule that as custodian, we're not responsible. So if you set up an LLC and you go break the rules, we no longer have to worry about liability. And that was something 15 years ago everybody was a little bit unsure of, is we can custody it, but if this thing blows up and the IRS reviews it, is that client going to sue us, right? Is there liability? And it's been ruled time and time again that the custodian is not liable, and so it's a combination of lack of liability at the custodial level, as well as a lot more clear information that the IRS doesn't have issues with basic structure, right? And the combination of those things has caused most of the custodians in our business to take these on more regularly. All right, let's see. We got a couple more come in. This is great. Give me just a second here. Sorry, the mouse is a little tricky. Give this one more try, and I may need to step off the screen here to do this. There we go. All right. It says, is there a problem for me to serve as the LLC manager as long as I don't take a salary? And I've already addressed that question. Again, I can only tell you what we've seen. According to some of the previous cases, there doesn't appear to be an issue with the IRA owner being the manager. I don't know of a scenario where someone's taken a salary. I would probably certainly steer clear of that. But remember what I said, we can tell you we've seen it, we can tell you the IRS has looked at it and not had an issue, but I can't tell you how they'll view that tomorrow because the IRS is the only one that can make the rules. And there is nothing that the IRS has produced that says you can be the manager of an IRA and LLC. So until that point, you're operating a little bit in your own regard as far as whether or not you're following the rules. And that's the tricky part about these LLCs. Is there could be landmines that you don't know exist, and obviously we never want to see that. All right, I think, let me get to the end here. So if you want to get your self-directed IRA guide, just text your first and last name to 484848, and that'll allow you to go through the steps to get that self-directed IRA guide. I certainly would encourage you to take advantage of that. I'll open up the questions, make sure that we've gotten to them all. Give me just a second here. All right, it says, do all the funds need to come from the Roth IRA for a new rental property, or can a portion come from an IRA and then hard money lenders? Or non-related investor, could we refinance to a regular mortgage and pay back the other investor? If your IRA is going to buy real estate, whether you buy it directly in the IRA or through an LLC, same rules. You can bring on debt, whether that be through a hard money lender or a private lender, as long as they're non-disqualified. However, it must be non-recourse. Non-recourse means that there is no personal pledge to repay the loan by you as the account owner or any related family members. So if you're going to take on a non-recourse loan, typically they're going to look for about 30 to 40%, down, because that's their equity and that's all they have in the event of foreclosure. Unlike a traditional loan where if they foreclose and they don't get enough money to recoup their debt, they go after you personally. In an IRA loan, being non-recourse, they can't come after you personally, only the property. So be aware of that. We do have a separate class. If you go to the blog section of newviewtrust.com and scroll down, we've got classes on both the private lending and non-recourse loan side of it, as well as the tax that you incur for taking on debt called UDFI and UBIT. I would encourage you to go watch both of those before moving forward in that. Somebody asked, as far as using a third-party LLC manager, should they pay the manager an administrative fee? I don't know the answer to that. That's between you and the manager as to whether or not they should be compensated for that role. I would imagine a third-party manager would want to be compensated, but again, that's between you and them. I can't speak to whether or not that makes the most sense. Last question I'll take, because we do need to wrap up. It says, can you add additional funds to the LLC if you make your annual contributions? So again, I will answer this with a clear caveat. Nobody knows the answer because the IRS has not specifically addressed that. However, the short answer is typically yes, because the IRA is investing into something that is owned by the IRA. So they're adding money to the same investment. If you buy this with multiple parties, so let's say you buy your IRA and your spouse's IRA, 50-50. If you're going to add money, it has to be the same prorated split, 50-50. That's a fact. Because if I take 50-50, if I have an IRA LLC that's owned 50 by my IRA and 50 by my wife's IRA, and let's just assume she puts a $5,000 contribution into her IRA for the year and I don't. She cannot go add $5,000 to the LLC because it will no longer be 50-50. It may now be 51-49. But the issue is, who did she get that 1% from? Me, right? Because I had to give up a percentage for her to take a percentage. And the IRS says, hey, wait a minute, you can't transact with your IRA. If you're going to do anything alongside disqualified parties, everything has to be done pro rata. If I'm adding money to a 100% owned LLC, I'm not changing my ownership interest. Therefore, so far as we understand, there's no issue with that. But again, you always want to make sure that you're getting some sort of competent legal counsel, because the IRS could come in and view that however they want to. When you get into these LLCs, you're taking on some additional risk of unknown risk, whereas if you do that same transaction directly in the IRA, there is no question as to risk. You can always make contributions and use that money for future investments. So thank you, everybody, for joining us. Thank you for allowing us to go on about 10 or 15 minutes longer. I appreciate all of the questions that were asked. We do record all of these. They are found under the blog section on newviewtrust.com. As a self-directed custodian, we want nothing more than for you guys to be successful in all of your investments. If there's anything that we can do to help answer additional questions, we've got a team at the phone number here, 877-259-3256, that can get you set up, walk you through the process, help you understand what the rules and regulations are, and allow you to make an informed decision to self-direct your account. So we certainly hope we're the choice when it comes to self-direction. If you want additional education, keep an eye on our upcoming class schedule, which can be found on New View Trust, or go back to our blog and take a look at all the pre-recorded classes over the years, and we certainly hope you'll find everything you're looking for there. But thank you guys for joining us, and take care.